Welcome back to the Retail Initiative Podcast. I have an exciting episode for you today. One of my absolute favorite people in the entire retail community, Christyne Gray from She Profits Now. Christyne, it is so good to have you on the podcast. How are you?
I am really good, Josh. It is really good to see you virtually. Last time we spoke, we were live seeing each other at your guys' event. And so it's fun to be invited into this podcast. I'm looking forward to the conversation.
Yes, absolutely. And I love, one of my favorite things about retail is, it feels so big. There's stores all across the country, retailers of different types all around the country. But the more you get into it, the more you realize that the world of retail is small. And it is rare that we're going to find new people that we don't know. And Christyne and I get to speak at a lot of the same events. And so there's plenty of the hotel bar drinks with me, you, and a lot of our other friends in the retail space. And so it's always a pleasure to speak with you. So you talk a ton about money. And I remember I had a reel with you. So we were recording some content, and one of the pieces I asked about was like an advice you would give, and you talked about money mindset, like the way that people think about money and all of that. So when you say money mindset, what do you mean by that statement?
Yes. Okay. So money mindset, traditionally, when we think about money mindset and mainstream money mindset coaches, they're going to go backwards into what's your money mindset relative to how you were raised, relative to what you were taught, in our younger years. When I coach money mindset, I coach it where you're at today. I coach it where you're at today, where you want to be tomorrow. And I don't put as much emphasis on the past. And the reason being is, I don't want to dwell in the past, right? Like looking back is just informational. Planning forward is where our power comes from, and that is included in money mindset. And so when I'm speaking about money mindset, I'm talking about what is the gap that you are in today and what opportunities do you have around your money. And you've got to create efficient and an effective and a very focused mindset around what you plan for your money. What purpose do you want your money to serve in your business, in your household, as it transitions between your business and your household, and how effective that transition is. So money mindset for us here at She Profits Now and within our Financially Fabulous coaching program is all about assigning purpose to every dollar that you earn in your business, to make sure that you are able to have each dollar touch the areas that are important to you, whether it be your marketing, your occupancy in your brick and mortar, your employees, your debt reduction, your owner's pay, your taxation, right? Like all the compliancy things. Assigning purpose to every dollar, it actually first starts with the mindset. You've got to want to have the control and the framework around that money when it comes into your business, so that you can meet the goals and the vision that you've set for your business before the money is out the back door and you're looking back at it going, what happened? I have no money. My checking account is at zero and I have all these goals and initiatives that I want to accomplish. So for me, that's where money mindset starts, is what do we want out of our financial future and how do we focus on that? And again, assign purpose to every dollar. Let's stop looking backwards and dwelling on where we came from and instead reset the story for where we want to go. That's my money mindset coaching methodology.
Yeah, I love focusing on where you want to go. One of the interesting things in retail, and I think this is kind of two ends of the spectrum, and I'd love your opinion on it, is I think early on, we look at, okay, we're going to go to market and we're going to buy this thing for $20 and we're going to be able to sell that thing for $55, $60. I'm going to get rich. And this is so easy. How could you not be loaded in retail? And then this transition happens and I start hearing people say things to me like, well, I'm in retail. It's not like I'm going to get really rich. Like it's, there's no way to make money in retail. And it's like this in between that I don't hear that often. So what do you say when people do have these beliefs around, one, how easy it is, or two, this idea that you can't be incredibly successful in retail? Like, what do you say to that kind of person?
Yeah, you're really it always comes when I'm right in that gap, right? Like you're right in that gap to go, okay, when we come into retail is a very easy entry business. And it is one that is very glamorized. It is, right, like we all, us women, especially, the women clients that I primarily deal with, and I know you have a lot of female-based clients, not to say that they all are, we love to shop. And most people in retail, male, female, I guess I don't want to segment, we love to shop. We love to go out and buy. We like to work with our clients. We like to showcase product, really, and create stories around product. That's the fun part. Getting into retail is rather easy because you really just have to start out with a little bit of cash in the bank, buy that inventory, and like you said, turn it and make 3 times, 4 times, 5 times what your cost was. And the reality is it then comes like that easy entry is what gets individuals in the door of this industry. That's how we create the retail, independent, small retail entrepreneur is the easy entry based on what we love and our passion areas. But then you are so right, is the reality hits. But that's all entrepreneurship. Entrepreneurship is hard. That doesn't mean it has to be, it's hard in that it's a lot of work, but if it's focused and if it's intentional work, it can actually be very easy, right? Like, because if you have a plan in place. And so when we're in that gap between easy entry, I'm doing what I love, I'm coming in, I'm going to make a ton of money, to what you said, where you're going, okay, I can't make any money here. Why am I residing in this space as an entrepreneur? Right there in that gap that I'm always coaching to, it comes down to, where have you focused on results? Where have you focused on initiatives to make sure that every decision you make, it has a dollar assigned to it. Every single decision you make has a dollar that is happening and flowing through your business. Are you being intentional with it? Meaning, when you buy that inventory, is it in the right products, your product classes, at the right dollar amount, at the right time? Are you planning for adequate turn levels, turn rates, and are you pricing it for profitability? But with that, once you create the sale, what are you doing? Again, comes down to that money mindset. What are you doing with the dollars before they actually leave the bank account? What's the plan ahead of time? And the gap between us being so joyous about our businesses and coming in as easy entry, and we're going to make $1 million, this is going to be the easiest thing ever, to this is really difficult, and maybe I've now accrued some debt. It all comes down in planning. It all comes down in being intentional. It comes down in planning, right? Like having an actual plan with a framework that you follow. And you allow yourself, because here's another thing that's happening, Josh, and you see this definitely with what you guys do, is the independent small retailer is traditionally the creative, right? Like we have creative mindsets. And so all of the glamorous sides of the business is what we want to focus on, and that is our priority. But then we ignore the less glamorous side, which is what I do for a living, right? And it's the data. And what is the data telling us? What are your sales metrics telling you? What are your inventory metrics telling you? Your financial metrics? When you ignore that gap and the analytical side of your business, that's where the difficult comes in. That's where the I can't make any money in this business comes in, is because you've actually ignored how you're going to make money in the business, like the tactical parts of how you're going to make money in this business. And where I say I would guess that that's a lot of what you have to coach your clients as well, is we've got to understand the metrics behind the marketing, the metrics behind the expenses of obtaining and retaining a customer, right? It's not just all about the pretty things. It's also about the details behind the dollars.
Yes.
Does that answer your question? But
it does.
In another place with that too, and I'm sure you would agree.
Real quick, before you move on, sorry, because just one of the funny things that I see, and I think that we're going to see a different side just due to the kind of people that are coming to us, the kind of people that are coming to you. We are blessed to have a lot of shared clients, which is so much fun. Is I do get people that are on the other side of that, where like they were former accountants, they come from a corporate finance background. And with those, a lot of times I actually have to pull them into those pieces where it's like, hey, the data is important. But like I remember one we were working with a few months ago, and we were talking through perfect customer, which I could talk about all day long. And I was trying to get them to go into like, hey, like what's like what I call a contradicting value? Like I love Jesus, but I love the F word. I love my health, but I love tequila. Like those are contradicting values that you need to understand that your customer has. So let's understand. And my customer was like, yeah, I don't really care about all that woo-woo stuff. Can we just talk through like wanting to get right back to data? And I'm like, hey, you know what? Like a healthy business will be able to know like which one do I naturally focus on and realize, okay, well, I need to put intentional effort on the other side.
Yes.
And so when you're getting a bunch of creatives, we need to pull them into that data side. And when you have data people, we kind of have to pull them into the creative, because the reality is it's like the science and the art are both 1000% necessary. So sorry, I cut you off, but I wanted to
love
say
that.
that it's something I see a lot in retail.
And when you have those clients, I want you to have them call me, because I'd love to nerd out with them just for a little while, because they're probably over here doing all of their financial management and all their number crunching, right? And their data analysis. Have them call me once in a while. It'd be fun to nerd out with somebody that's like, no, I'm the data nerd. versus,
so
versus always the creative, which I love. We love our creatives. So that's fun for me to hear, though, right? That it actually does go both ways, because I'm sitting in my little space going, all right, it's traditionally me coaching the creative to not be scared and intimidated over the analytical side of their business, and to treat it as a priority, right? And in all honesty, not to undermine the creative side of it, because obviously that's a huge part of our industry. That's what makes it boutique. That's what makes it independent, small retail, and so special, is the creative and the experience. But without the financial analytical side and the committed decision making around your dollars and how we're using them and the financial health of the business, we won't have the creative business to work with, right? And so it's truly so important to really prioritize both, put the same energy into both. But that's where we're seeing the successful entrepreneurs too, right?
Yeah.
Is the ones that have learned that the formula really does include both the creative and the analytical.
It has to. I mean, I can't tell you how many retail businesses I see where it's like a $10 million business and the owner at best is making $100,000 a year, which it's like I know for a lot of people, they're like, hey, 100,000 is like a dream. I would love that. But if you think the level, like how big of a business you've built at 10 million to only be making 100K per year is not like, you would be better off working for another retail business at that point.
Well, the effort and the risk that goes into owning and managing and being the visionary and the CEO of a $10 million company is astronomical, to only walk away with $100,000 and then to pay your taxes on that. And right, like, and if that's their true profit, to also have to continue to scale with that profit, right? Like reinvest back into your business. So that is disheartening. I don't know if you're aware of this or not, but we coach very high level, best in class, because I'm always looking at going, I'm not going to coach you to mediocrity when you come to our programs. I'm going to coach you to what your potential is and what we see the highest performing entrepreneurs in our industry achieve. And that's 20% profit. We've got many over the years, retailers, independent small retailers who are making 20% profitability. So if you start to take what is that net sales times 20%, and that could be your potential owner's pay, right? Or dollars going back into your business to grow it and to scale it. That's the mindset that we want our listeners to get into, is that what our expectations are for ourselves should actually be higher. Let's set the bar higher.
Yes. Oh my gosh. Absolutely. And you talk about that money going back into the business, and as a financial coach, I'd love your opinion, because one of the things I hear a lot, so I'm talking to when I'm talking to someone, I'm talking to like an established brick and mortar retailer who's like, okay, let's really start to see the online side of this business take off. And I'll get into their goals, and I'm like, all right, 2 years from now, we're talking like, where do you want things to be? And, they're talking about that their online sales are doing as much as their store. Like, this is where they want to see their business going. And then we'll talk about what it looks like and how much it costs and all of that. And they're like, okay, now I need to go back to my accountant and see if we can do this.
Yeah.
And it's the accountant is at that point, the yes or the no. And so when someone is really wanting to level up, it could be focusing on online, it could be location Number two, it could be this massive new marketing, like they've never really done Facebook ads and they really want to go all in. What do those conversations look like for you? Because I know you've always had a more growth-centric attitude towards those kind of things. Like, if I were your client, like, how are you going to coach me in that?
Yeah, our belief system is definitely profit-centric first, customer-centric, client-centric, along with your first, right? Like you need to have them hand in hand, but then growth centric and sustainability centric, right? Like growth is defined differently for everybody. So even if we call it sustainability with growth, but what does growth look like? Is I do coach that growth is growth and profitability, not necessarily growth in revenue. But in order to grow our profitability, once we reach a certain stage of stabilizing our company and reaching our own best in class of profit with where our revenue is today, then we've got to seek out revenue to have growth and profit, right? Growth and owners pay growth and take home money. And so when I'm coaching to the ads campaigns and how we grow our business, not even just ads campaign, how do we grow our business? To grow our business, we have to grow our clientele. And when we grow our clientele, we have to do it as efficiently as possible. Your traditional accountant is traditional. We're talking very traditional, is not going to understand the retail segment and the nuances within our decision making and how that money flows through our business and what needs to be done to grow our business, what needs to be done to take a brick and mortar to online and have it equivalent, if not more, right? And so your traditional accountant, so that's the first thing to look for, somebody that truly understands your industry and how the money flows through it and the decisions that have to be made within. Because you can't take generic advice. No retailer should be taking advice from their family farm accountant, right? Like they're just not going to get it. And so that's like the first and foremost. But once you have the accountant that understands your business and what your initiatives are and what those goals are, like you said, to grow your brick and mortar online and what it's going to look like, it's an investment. We have to have profitability to fund the investment, but then we also have to map it out. So I'm always looking back 12 months to understand where we're coming from. We've talked about this, standing in the gap of opportunity, which is this discussion, and then planning forward 12 months. So that client, I would say in 12 months, what rate can we scale this company while still meeting your top level priorities financially and carving out enough money to invest into growth initiatives. And so it comes down to that framework and mapping it out. You've got to have a plan. And so the process that we bring our customers through that is very forward focused is, let's just map it out. Let's see that if we start our bank account, if we start the next 12 months with an initiative to grow online, we know we need to put money into ads. We know we need to likely have managed services. We need to have some design. We need to have some continued education for ourselves. How are we going to afford that as a top level priority? Then it comes down to what is our revenue potential and how is that growing period over period logically, right? Like you're not going to get A to Z in 12 months. What's the slow progress of revenue growth? And then as we're slowly growing that revenue percentage period over period, what does it look like in our spend? And so if I even were to bring it down to very granular level, it would be, like I said, we start out, what's our starting bank account? What is our logical and realistic revenue goals and how we are able to grow? That is really kind of finding your sweet spot with the investment. And I always carve out 12%. I don't know if you and I have ever talked about that. Like when I'm making a plan, a profit and cash flow plan for clients who are wanting a growth initiative, I'm putting 12% into their ads campaign. However, it might be events that they spend it on. It might be ads, whatever it is, I'm putting 12%. And then whatever their managed services is to help them get there, as well as obviously mapping out all of their traditional fixed and variable overhead. Also, identifying what inventory they need for that growth. And then that ties back to that starting point. If we started with $30,000, when we are growing month over month with our 12% spend and all of our additional expenses and our inventory growth, where is our bank account in 12 months? If it's at $30,000, we're golden. We've hit our sweet spot. So I always try to map it out. We want to end where we started in 12 months while investing in without accruing debt. And that means we're profitable, right? Like, because we have money to come back in. And that might sound a little complex the way I explained it, but it just comes down to, if you can end 12 months with the same amount of money in your bank and accomplish the goals that you've set to build your brick and mortar out to be online and be very calculated with it, why wouldn't you pull the plug or pull the trigger, right? And do it. Yeah, like, why wouldn't you? And a traditional accountant they're just gonna look at today and go, yeah, you don't really have the money to invest in this, so I wouldn't go forward. But what does the results produce period over period of going forward with that investment into online growth?
Yeah.
But it's got to be a plan. If it's not a plan, it turns into debt really fast.
Yeah. So dig into that 11%, right?
Yeah, 12%. I always put it at 12%. And then
explain that to us again.
Yeah. So when I am balancing out the cash flow use of the business and taking into consideration the slow period over period growth from bringing on new customers, right? Nurturing returning customers, bringing them through the door more times than once every month, right? Like returning customers, how often are they frequenting us? When I am calculating what that we call it logical and realistic revenue is, I'm automatically protecting 12% of that revenue for that growth initiative.
Gotcha.
But I'm also then making sure, so if our logical and realistic revenue is $100,000 for any given month, 12% of it is protected and it's going into our growth initiative. But then we've got to do the work and make sure that everything else, all the other areas we've committed to spend money on, balances with that, so that we don't go backwards in cash flow, we just retain.
Gotcha.
It's basically a net zero budgeting if you want to get really, definitive with it. It's a net zero budgeting to say, if I have $100,000 coming through the door, how am I spending $100,000? And it might be that some of it goes into a business cash reserve, maybe doesn't actually get spent, but it's committed somewhere.
Yeah.
And we go as far, Josh, just so you know, even with your customers that you have, this is good guidance for you to give them. We go as far as, when we are budgeting out a growth initiative plan, like what you guys do, in your operation, is we actually, even because we do coach to cash flow allocation strategies, right? Profit first style, envelope system style, Dave Ramsey style, however you want to define it. We call it our 40-20-40 cash flow management. But we will ask our clients to open a bank account for 12% of their sales that is for their advertising budget. And then that gives their ads team a budget to operate on. And then we also know that we're protecting our client from going into debt over ads that maybe aren't performing, right? Because if all of a sudden that ads budget in that bank account isn't producing results, it forces the entrepreneur to look at the service that they're using and find a better one, right? Or find another relationship. So there's some accountability and some guardrails there that we like to add as financial advisors.
Yeah, absolutely.
Yeah. But it protects the money, so it's not spent anywhere else, right? Because we are looking for a debt-free growth if possible. And if a client comes to us, Josh, and wants to borrow for their growth initiative, we map out when can you pay it back and how are you going to pay it back before we borrow it. Yeah.
Yeah, it's an interesting thing. And I do think some of it depends on how aggressive a company is wanting to grow. Like Nike, for example, I mean, they were doing 20 million a year and still operating completely on line of credit. But that was Nike. And, and Shoe Dog is, by the way, one of my favorite books for retailers. If you've never read it, talking to you, Christyne, and those listening, it is a fabulous book, but it's a very different style piece. I think that it does depend some on just how aggressive someone's wanting to grow, but in order to want to grow that aggressive, I think one of the big mistakes people make with debt is when the strategy really isn't there. The trajectory 100%. Really isn't there. And they're like, we're going to grow, so we're going to go get all this money. Well, at the end of the day, if you don't have the skill set and the team and all of these things that can get you there, that is stupid debt. But you know what? If you have a system built out that you can open a storefront, you can do this thing, and you know how to get people there, you know how to train a team to like all the things that make a store successful, and you take out a loan for that third location. Yeah, that makes sense.
Absolutely. Yeah.
Because you have the skill
Strategic
set.
debt is smart debt, but that means you've mapped out what your expectations are for a return on that investment, right?
Yes.
So, and that's where we cross the line of the industry being healthy versus, the retailers that are financially healthy versus the retailers that are not financially healthy and really are at risk of failure, is that if it's not that whether they have debt or not, it's whether that debt is serving a purpose in their business,
Yes.
or is it just patching a hole? And that's what I try to prevent, is it patching a hole or a potential hole, right? Like, heck yeah, let's capital. It's working capital. If we have a plan for working capital, then yes, that is the best way to scale, because it is really hard to scale on just profit, but it can turn on you very quickly if you're not strategic, like you said.
Yeah, which I love. Like, I think that's something that's really unique about you, Christyne, is I feel like in the financial coaching space, it really is like two extremes. You have like Dave Ramsey types that I honestly think hold businesses back a ton. Like,
I 100% agree.
Even on little things where it's like you can't be getting credit card points because you're putting everything on a debit card. Which, as a quick side note for every retailer listening, ignore that advice.
Yes.
If anything, I don't know a single retailer whose card does not get compromised multiple times a year. I don't know what it is about retail. I think it's all the orders at market. Yeah. The cards get compromised so much. And if that's your debit card, oh my gosh, like get that zero annual fee credit card that gets you some points, if anything, just to protect yourself. Yeah. Pay it off once a week. Like, you don't need to. So anyway, I'm passionate about that. But back to the compliment. I'm sorry?
If I could compliment what you're saying there, is I 100% agree with you. I am all about points and mileage. Why wouldn't we take a family vacation on points for buying our inventory? Like, really? No. But where we can also protect ourselves is, yes, you need to have that Visa, MasterCard, that actual credit card to protect you from fraud, 100%. Get the points, get the mileage. That's dollars in your pocket that you get back. But how you, again, the guardrails, right? Like, I coach to the guardrails also. So the guardrail is that you are assigning purpose to every dollar. When you're making your money and you're selling your inventory, you're taking your inventory cost of goods sold, you're putting it into an inventory bank account, but then you've got an inventory credit card that's married up to that. And I'm saying credit card, not debit card, that's married up to that. And whatever balance you have in your inventory bank account should only be what's charged on your inventory credit card. Yes. And that will allow you then to follow a platform as I'm not overspending and I do have a plan for the money, but I'm still going to use the credit card and know that it can be paid in full every month. I'm going to get the points because the money is already in the bank account. And it takes time to get there, right? Like, that's the nuance in the plan and the framework to get there. But once you have complete financial management, it's just clockwork. Money comes out of your deposit checking account, goes into your inventory bank account or your operating expense. You've got a credit card assigned to it, and your spending is in alignment with the cash flow that's already there. But yes, please use the points mileage and use capital where you have the strategy in place for growth. Because that is how you open second, third, and online locations, right? Is by injecting capital. It's really hard to do it with profitability, and don't do it with credit card debt.
No. Yeah. And that's the thing that I love about you and what makes you unique is that, it really is it's not about completely avoiding this one side, like the Dave Ramsey stuff, but it also is not like debt heavy. Let's just run to it. You're not afraid of it, but it's also not like let's running into it. And you really have a great balanced perspective. And I think that's something that is so good and missing in the financial space. Is I tend to talk to people who have either themselves or their accountants just have really broken beliefs around that stuff. And I think the way that you're teaching is amazing.
And that comes back to the very first conversation, right? Like, money mindset is all about capturing opportunity. Are you an opportunist? And if you're an opportunist, which you are because you're an entrepreneur, then your money mindset needs to be switched to be, okay, I'm an opportunist, and my money mindset is that I have to have a plan in place and utilize my cash flow resources, whether it be borrowed or savings that I have in my household, or my own profitability as I generate it, to create additional opportunity in my business. But it's defining the opportunity and how you're going to capture the entire strength of that opportunity, right? Strategically. Have a plan in place. Don't just wing it.
Absolutely.
Head out of the sand, Josh. Head out of the sand, right?
I love it. Well, Christyne, it has been so good to have you on. If people want to find you, we'll put this in the show notes also, but if people want to find you, where can they find you online if they want to learn more about you or She Profits Now?
Yeah, we're sheprofitsnow.com. And our website is always evolving, making sure that we are communicating what we are offering. And so that's the best place. We've got a She Profits Now app where you can get our You Need to Hear This videos and any of our free coaching programs, as well as access to anything that is paid, obviously. But you'll find everything you need to know about us, sheprofitsnow.com.
Awesome. Well, Christyne, it was so good to have you. And for those listening, we will see you next time. Hope you enjoyed this episode.
Right. Thanks, Josh. It was a pleasure.
Hey, thanks for tuning into this episode of the Retail Initiative podcast. If you want more free resources, trainings, downloads, you can get those at madebycapital.com/podcast. Again, that's madebycapital.com/podcast. And for those of you that are serious and really want to take the success that you've built in your brick and mortar storefront and you want to create that same level of success online, I invite you to schedule a free call with me, at madebycapital.com/schedule, where we'll dig into your business, like where things are now, where you're wanting to go, getting really clear on your goals, and what are the 2 or 3 things that might be standing in the way of getting there. Now, look, if we're a good fit, I'd love to share what that looks like. And if not, my hope is that you leave with clarity on where to focus for you to reach your goals. So again, thanks for tuning in. And as always, leave a review, make sure you're subscribed, and I cannot wait to see you next time.